want to show you something that nobody in this space talks about. Two traders, same strategy, same win rate, same pair. One of them is grinding, stressed, barely breaking even, which I was as well. Other one is building real wealth, quietly, patiently, without taking more trades. The only difference between them is not skill, is not discipline, is not even their strategy, it's capital. And by the end of this video, you're going to understand why everything you've been told about getting better at trading might be completely backwards. Hey, I'm Dan. I wanted to start with this channel because most trading content is built around selling you a dream, and this isn't that. Let me introduce you to these two traders. Let's call them Trader A and this is Trader B. Trader A, let's say he has a capital of 10k and Trader B has a capital of 100k. Now that we know how much they trade, let's imagine that they have the same broker, the same strategy, the same setup, the same risk percentage per trade. So let's place 1% risk, both of them. So this is the risk that they use. Let's imagine the risk management is the same win rate, by the way. If you have a 40% win rate, you can be profitable if you have the correct risk to reward ratio, 40%. For the sake of this example, let's try it. They both take the same 3 trades per week. The same setup has a 1-to-3 risk to reward ratio. Okay, on paper they're identical traders, but their lives are completely different, and I'm going to show you why. So let's run the numbers a little bit, and I want to stay with me here because this is what it gets real. Trader A has 10k, Trader B has 100k. Trader A is risking $100, Trader B risks $1,000. Same percentage, completely different world. Now let's look at their weekly setup. Out of 10 trades, 4 trades are winners and 6 are losers. 4 wins, 6 losses. Let's run a typical week. Trader A loses $100 in the first week. So let's put it this way, 1 week. Trader A loses 100, wins 300 because it's 1-to-3. Trader B wins 3,000 and loses 1,000. 48 trading weeks per year, average net per week based on a 40% win rate with 1-to-3 risk to reward ratio. Roughly, Trader A is generating $6,000 to $8,000, while Trader B generates $60,000 to $80,000 a year due to the capital actually. Let that sink in. Trader A is generating roughly $6,000 to $8,000 per year. Trader B is generating $60,000 to $80,000 per year. Same strategy, same decision, and let's imagine the same screen time, 10 times the outcome. And here is where most traders make the fatal mistake. Trader A looks at those numbers and thinks, I need to trade more, I need more volume, I need to find more setups, I need to push harder because 6,000 a year is not enough. However, so they drop down to lower time frame. Their 40% win rate drops to 32 because they are taking B and C type of setups. Their risk to reward collapses because they are moving stop losses, cutting winners early, intervening, chasing entries, and so on. Meanwhile, Trader B, same 100k, same 3 trades a week, is not trying to find more setup. They don't need to. The math is already working for them. Trader B is being paid to wait, and we see that from the numbers. And this is the thing that nobody tells you when you're starting out. The market doesn't reward effort, it doesn't reward screen time, it doesn't reward the numbers or positions that you have open. It rewards patience, it rewards selectivity, it rewards capital. Most retail traders are playing the wrong game entirely. They're optimizing for frequency when they should be optimizing for quality and saving everything else to grow their account. Now let's think about the psychological gap. There's another layer to this nobody talks about. Trader A on a bad week loses 300, that's 3% of their account. It hurts, it changes their behavior. They start second guessing entries, widening stops, cutting trades early, and so on. Emotion creeps in because 300 feels significant when your account is 10,000. Trader B loses 3,000 in the same week. That's also 3% of their account, same percentage, but psychologically they've been in markets long enough with enough capital behind them. That 3,000 doesn't alter their decision making. They follow the process, they trust the edge, they wait and they let it run. Much more better understanding about the market, and they are not under stress. So capital doesn't just change your returns, it changes your psychology. It gives you the breathing room to trade the strategy as it's designed, without desperation, without forcing, without fear, and so on. So what does this exactly mean for you? Because I know that you're thinking, Dan, I don't have 100k sitting around, and that's fine. Neither did I when I started. But here's the shift I want you to make right now in how you think, not just how you trade. Stop measuring your progress by how many trades you take. Start measuring it by the quality of setup you are waiting for and by how consistently you're building your account, because the goal isn't to trade your way to 100k by over trading a 10k account. You'll blow it. I've seen it hundreds of times. The goal is to protect your capital, trade only the highest confluence setups, grow the account steadily, and let compounding and discipline do the heavy lifting. 3 things I want you to take from this video and leave with something valuable. 1, 2, 3. First of them is your strategy, which is probably fine. Your account size is the variable you need to work on over time. Second one is go with fewer trades. Every time you take a low quality setup, you're not just risking money, you're polluting your own data and corrupting your own edge. And the third one, you are paid to wait. Third and most important one, it changed the way I see the market. The trade isn't the work, the waiting is the work. The analysis is the work, the entry is the final step. Traders who understand this early are the ones who are still trading 5 years from now on. This hits differentiated with someone who's been overtrading and grinding and wondering why it's not working, because this is the conversation they need to have. And by the way, everything I've talked about here, we do this on a daily basis in our Discord, so if you want to join, it's a free ticket to see how real traders work, and I'm waiting you inside. If not, regardless, take the lesson, stop trading, start waiting. I'll see you on the next one. Cheers.